Eric Muadh with Muadh.com. Let's take a look at CREE, CREE for the week right now, down about 15%, middle of August 2016. So from a technical standpoint, trying to understand why the stock is down, and we can see a couple of technical things here to consider. Number one, this week we are slashing back below RSI 50. That tends to lead to a big reaction or move lower. The last time we had a big drop here was when we moved below 50 again. And if you go back and check the previous strong weekly gain, you have to go back to this week here when the stock jumped above RSI 50 on the weekly for this nice weekly gain. So we can see here that for the week we can see the reason from a technical standpoint why the stock is having a huge down week is because it is slashing below its 50 RSI level. But you can also take a look at the long-term weekly chart and see that the stock has been giving red flags every time it comes to this price range. Both price ranges here were red flags, and I'll show you why they were red flags in terms of suggesting that the stock would pull back, and of course we saw those pullbacks each time. So I'm talking about this RSI period here and here. So what we can do is take a look at a longer term picture. This here is a 2-year weekly. Let's go to the 5-year weekly, and what I'm gonna do is draw a simple straight line. And so what I'm gonna do is draw the line right around, let's call it right there. So that line happens to be at about 61.8 on the weekly RSI. Now it does give interesting points here and observations. Number one, take a look at this period here when the stock was trading above 61.8 or above this blue line. This corresponds with this nice strong advance in the stock in late 2012, early 2013. In fact, if you take a look at the bounces, support at 61.8 here with uniform activity for the lows actually right there. So we can say the move began here. So support on the line there during this period led to a nice recovery. Support again at 61.8 was during these lows here, and the stock did go on to record higher levels. Now let's flip the script, and you can see that every time since we broke below this level here of the highs there, every time we move above this blue line and back below it, or another way of saying this is every time we move above 61.8 and back below it with uniform activity, we tend to get a sell signal. Here, uniform activity rejection for the actual weekly closing highs there in late 2013. Uniform activity rejection here on a weekly RSI level for the highs there. Uniform activity rejection for the highs here recently in 2016, and again recent uniform activity rejection here on the RSI led to the highs here and the subsequent most recent drop. So here we see that drawing a line at 61.8 gives you a nice visual understanding why the stock has been responding the way it has over the last 3 years or so every time it tries to rally. Eric Muadh with Muadh.com. As always, good luck, peace, and blessings. Blessings, blessings, riches, blessings, 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 blessings. I am out.